With just a few weeks left in 2024 and New Year just around the corner, there are tax deadlines and tax planning considerations you want to stay on top of so you can optimize your finances in the year ahead and beyond. Nicole Ewing, Director of Tax and Estate Planning, TD Wealth, joins me now to tell us all about them. Nicole, I'm going to jump right in. One of the big topics this year, of course, has been capital gains inclusion rate. Remind us what has changed and what we need to think about.
Well, the government has proposed that as of June 25th, 2024, there's a change to the inclusion rate for individuals, trusts, corporations. For individuals, what it means is that any gains beyond a threshold of $250,000 will now be included in your income at 66.67% rate and then taxed at your marginal rate thereafter. So we want to think about this from what is our asset type, what is our time horizon, what's the rate of return on this, and should we be selling or realizing, crystallizing these gains before the end of the year in order to maximize our $250,000 threshold. If you want to maintain your position, you simply buy that security back and you'll have it at the new cost base. Thinking about this, there's also an option for capital gains reserves. So if it's not securities, it's some other type of asset, perhaps a business or real estate, you might have the opportunity to be realizing those gains over a number of years. But what's unique about this year is that new $250,000 threshold for individuals, under which we have an inclusion rate of 50%, over which we have that inclusion rate of 66.7%.
Interesting. That could be triggering some volume. We should be taking a look at that. Tax loss considerations. What are things to think about before the end of the year?
So tax losses, tax harvesting, this is the time of year to be doing that. And we look at underperforming securities in our non-registered accounts, and these losses can then be used to offset the gains and reduce our overall tax. Now, net capital losses can be carried back 3 years or they can be carried forward indefinitely. So we want to look at what our position was last year, what we expect to be happening in the future as well. Unique to 2024 is that we actually have 2 periods. So we have this June 25th time limit where pre that is period 1, post that is period 2. And when we're doing our loss calculations and determining how we're using that to offset our gains, we actually do need to be mindful about what period these things are happening in. So depending on very unique circumstances, it might make sense to delay the realization of a loss into 2025, but this is where your accountant and an investment advisor can help you look at your unique situation. We also want to be, another change in 2024 was the deadline for this. So while it's a December 31st deadline for realizing your losses to be able to use those against your 2024 gains, we have a change to the settlement date. And so previously it was the date +2. Now those settlements have to happen the following day. So we have a T+1 rule that applies. So that means technically you could wait until December 30th before triggering your losses, as they would be realized by December 31st. But we want to be doing that well in advance to make sure that we're not having some trip ups at the last minute that could prevent that from getting in on time.
Yeah, just because you can doesn't mean you should. But anyway, okay, let's talk about if you've got a child or grandchild and they're buying a first home, you're thinking of gifting them funds, you should be encouraging them to think about the benefits of an FHSA before the end of the year.
Right. So if the individual is at least 18 years of age, then they have that ability to contribute $8,000 to your FHSA. You also have the option to carry forward up to $8,000 as well. So if they have room from last year, they would be able to be using that in the current year. We want to be opening that before the end of the year in order to get that 2024 contribution room. If we waited until next year, for example, we wouldn't have the opportunity to carry forward that $8,000 of room. So if we are thinking that we're going to be purchasing in the near term, then opening this account before year end will give you that extra $8,000 of contribution room. And we like this because the contributions are tax deductible to the individual who's making that contribution. So to the child or grandchild in this case, we have the tax-free growth, and then those funds can be withdrawn tax-free when used towards a home purchase. So a very effective vehicle for a first home purchase.
What about TFSAs and RESPs before year end?
Right. So TFSA is a wonderful investment tool that we again are allowed to have tax-free growth within that. We are able to carry forward any contribution room. So if we haven't maximized it in this year, we're not going to lose it. We get to utilize it again next year. But what's critical is if you're making any withdrawals from your TFSA, if you're thinking of doing that in the new year, you might want to be doing that before December 31st of 2024, because that contribution room would reset on January 1st. So if you were able to recontribute next year, then you're able to do that without needing to wait for a full year to pass for 2026 for it to regenerate. So TFSAs are great. RESPs as well. We think here about the government grants, which make these a very effective tool to be able to save for education. We can get up to 20% of $2,500 annual limit per child to be able to grow our savings more quickly. If we have unused grant room, we want to be mindful about the children's ages. So if there's less than 7 years before that child turns 17, we're starting to run out of time to be able to maximize and access the full value of the grants. So making some contributions this year would be important. And similarly, if your child is 15 and you have not yet opened an RESP, you'd want to do that before December 31st in order to be able to access those grants in the following couple of years. So December 31st is your deadline in order to make a contribution that would allow you to get the government grants, the CESGs for 2024, and it creates your eligibility for 2025 and 2026 as well. So an important threshold, an
Nicole,
important date.
this is a high value list. I've only got 20 seconds. I want to get to charitable donations in there. So just quickly, if you could tell us what to think about on that front.
So a very effective tool. We have federal and provincial donation tax credits that can result in tax savings of up to 55%. And so very important, December 31st deadline for that. If you're donating securities, you want to do that a little bit in advance to ensure that you have the times met. You can make these online contributions as well that could result in an immediate receipt. Alternative minimum tax is a new consideration for 2024. We have different amounts that are included. You're not being able to get the full value of the donation credit for AMT purposes. So working with your accountant, again, will be really important to make sure that you're not inadvertently resulting in tax, but you're maximizing your charitable donation opportunities.